Hey guys, welcome back to my channel Accounts Accuracy. As we have already discussed first 10 questions in the previous video, let us discuss the rest of the questions of Specimen Paper 2021 ISC Board. So here question 11 says that on 1st April 2020, Pixie, Nixie and Gypsy entered into partnership with the fixed capital of 60,000, 50,000 and 30,000. Now it's the partnership which started on 1st April 2020, but you can see here the date is different, that is 1st October 2020. That means on 1st October 2020, Pixie gave a loan of 12,000 to the firm. So as this 12,000 loan was given on 1st October, so that is why from October till the March 31st 2021 it will be only 6 months. So here the loan will be provided only for 6 months on this 12,000, not for the whole year. As the loan will be provided for 6 months only, so 12,000 into 6 by 12 will be done. Again, there is no rate of interest given in the question. So that's why in case when there will be no rate of interest provided in the partnership deed, it is taken 6%. So that will be 6 by 100. So you can, as there is no rate of interest provided on Pixie's loan, so that is why 6% of 12,000 you need to calculate, and that too for 6 months, that is October to March. So now what will be the rate of interest? That is 6 by 100 into 12,000 into 6 by 12. Because 6 months, it will be provided for 6 months at the rate of 6%. So that will come 360. So the net profit will be 1,21,000 minus 360. That will come 1,20,640. Rent has already been deducted. Only the amount of interest on loan to Pixie will be deducted, because this is also charged to profit and loss account. It's not an appropriation. So for that we need to deduct two things, that is rent and the interest on loan. Rent has already been deducted, so only interest on loan will be deducted, and our net profit will be 1,20,640. So here the correct option will be B, that is 1,20,640. The next question is interest on drawings charged from Nixie will be what? Interest on drawing of Nixie is 6,000, and that also for 6 months only, because she is withdrawing the end of every month. For 6 months she is drawing 6,000. So 6,000 into 8 by 12 we have to do into 4 by 100, because rate of interest on drawing is 4% provided in the question. Now as you know, number of months left before first drawing is 11 months, and number of months left after last drawing is 6 months. So 11 plus 6 divided by 2, it will come 17 by 2, that is 8.5 months. So whenever you will have the question for end of the month, you have to remember it will be 8.5 months. So the interest on drawing will be provided for 8.5 months at the rate of 4%. So that will come 170 rupees. 6,000 into 8.5 by 12 into 4%, that is 4 by 100. The answer will come 170. So here the answer correct option will be 170. The next question is question 12. Now in this question it's been written that Dev, Gautam, Kamal were three partners sharing profit and losses in the ratio 2:2:1. On 1st April 2020 the capital balance is to 90,000, 80,000 and 20,000. But this 20,000 is written debit. That means it is unfavorable balance of capital. On this date they admitted Naveen into partnership with a capital of 50,000. Naveen has entered for 1/4 share of profit with a guaranteed share. Distributable profit is 40,000. So Naveen entered for 1/4 share with the capital of 40,000. And again it's been given the new profit sharing ratio of all the four partners is 6:2:7:5. The profit of the firm is this 1,60,000. Now interest on capital rate is given 10%. Interest on drawings are also given for the two partners. Salary of the two partners are also provided. Next, what we need to calculate here, the sacrificing ratio of Dev, Gautam, Kamal will be what? Now, what we need to do? We need to calculate interest on capital. For that, 10% of Dev's capital, that is 90,000, 10% of Gautam's capital, that is 80,000, and 10% of the new partner, Naveen, that is 50,000 will be calculated. We need not to calculate that one more partner because his capital is not having favorable balance. So all the 10% of these three positive balances, that means capital balances of the three partners is 22,000. So this is the total interest on capital which will be provided to them. We do not provide interest on capital if the capital will be debit. You can see here Kamal has the debit balance. So no interest on capital will be provided to him. Only interest on capital for these three partners will be provided, that is Dev, Gautam and Navi, and that is coming 22,000. So correct option is 22,000. Deficiency in Naveen's profit will be what? For this, what we need to do? We need to find out the divisible profit first. And as in the question it's been given that Naveen has been guaranteed a profit of 40,000 in any case by the firm. So that's why Naveen will definitely be provided 40,000. As we know that net profit is provided 1,60,000 and interest on drawing is already given, that is 3,000 and 6,000. The total value is 9,000, and interest on that we calculated in the previous question also, that was 9,000, 8,000 and 5,000. Total is 22,000. Salary is also given in question, 7,000 and 10,000. So when we are finding out the balance, the divisible profit is coming 1,30,000 after deducting 22,000 and 17,000 from 1,69,000. It is coming 1,30,000. Now the profit value which will be given to Naveen as per 1,30,000, it is coming 1,30,000 into 1 by 4, it's coming 32,500 only. But in the question, it is given that Naveen was guaranteed a profit of 40,000. So guarantee was 40,000, but in his behalf, out of 1,30,000, it is only coming 32,500. So the difference of 40,000 and 32,500 is 7,500. Hence, because deficiency in Naveen's profit is of 7,500. The next question, here it's given that Ritesh, Somesh are partners in the firm sharing profit and losses equally. They admit Satvik on 1st April 2021 for 1/5 share in the profit of the firm. Future profit sharing ratio between Ritesh Somesh would be 3:2. At the time of reconstitution, goodwill was valued at 2 years purchase of average profit. So we need to find out the average profit of the following years. That means all these years. Along with that, few adjustments are given. So these adjustments must be done while calculating the average profit. So let's see how it will be done. Now here let's calculate average profit. In the year 2017-18, profit amount is given 70,000 and 15,000 is loss by fire, which is an abnormal loss. So it must be added because we add abnormal loss in order to find out the net profit. So here net profit will become 85,000. In the next year 2018-19, the profit value is given 50,000. From that we need to deduct abnormal claim, that is abnormal interest, which is 5,000. So it must be deducted. So value will become 45,000. Then in the next year, the 2019-20, the profit is given in minus because the profit is not there. It's loss. So as 40,000 is the loss, in that we need to add this voluntary retirement claim, because as it's minus, so the amount of voluntary retirement needs to be added. And when we are going to add 20,000, still the balance will remain negative, that is 20,000. The next year 2021 to 2020 to 2021, the profit value is given 60,000, out of which we need to deduct 10,000 insurance premium value, which is abnormal income. So again we are deducting it and the amount of profit of the year 2021 is coming 50,000. Now after calculation, the total profit we are getting 1,60,000 and the average profit of 1,60,000 will come rupees 40,000. So hence the average profit of the year 2017-18 to 2020-21 will be D, that is 40,000. The next question is the value of profit of the firm on Satvik's admission will be what? Goodwill value is to be calculated for 2 years purchase of goodwill. So that's why your 40,000 multiplied with 2, answer will come 80,000. So value of goodwill will be only simply you have to multiply 40,000 with 2, it will come 80,000. The next question is Satvik is unable to bring in cash his share of goodwill. The account to be debited to record his goodwill compensation will be done through Satvik's current account, because whenever a partner becomes unable to bring goodwill in cash, that is raised through current account. Now let's come to sum number 40. This sum is the sum of admission. So now in this question, Dhruv and Ans are the partners in the firm sharing profit and losses in the ratio 7, that is 75% Dhruv and 25% Ansh. So 75% is 75 by 100, which will come 3 by 4, and 25 by 100, which will come 1 by 4. So the profit sharing ratio will become 3 by 4, 1 by 4, that is 3 is to 1. Now on 1st April, Kavi is admitted as a new partner on the following terms. You can see here at the time of Kavi's admission, workmen compensation reserve, what will be done at the time of Kavi's admission to workmen compensation reserve, and the adjustment regarding workmen compensation reserve is given. The liability of workmen compensation reserve is determined 3,000. Now 3,000 is the claim and the total money is 5,000. So out of 5,000, when we will deduct 3,000, 2,000 will be the balance, and that 2,000 needs to be credited to old partner's capital account, because this amount is not utilized as the claim was not there more than 3,000. So 2,000 is the leftover amount which will be credited to old partner's capital account. Next we have the value of land and building in the balance sheet of the reconstituted firm will be what? Here we need to find out the value of land and building, and the adjustment regarding land and building is given that it is found that land and building valued at 25% above cost. It is decided to bring it back to its cost. Land and building needs to be brought to 25% less on the cost price because it was overvalued. So 100 by 125 we need to do in order to bring it back to its original cost. It was overvalued. So that is why 100 by 125 into 25,000 will be done, which will come 20,000. So this A is the correct answer. The value of land and building will be 20,000. The next question is to adjust the creditors in adjustment 3. What do we need to do? Here it's been given in the adjustment, that is creditors include an amount of 5,000 received as a commission from Amar. Now this is the amount which has been included out of commission wrongly. So that is why this needs to be debited back, because creditors are the liability and liabilities are always credited. But as we need to cancel this 5,000, so that is why that creditors will be debited, and the correct answer will be creditors account will be debited with 5,000. Now the next question is the provision for doubtful debt in the reconstituted firm will be what? Now provision for doubtful debt will be nil, because in the adjustment it's been given that bad debt amounting 18,000 are written off, the remaining debtors are good. So as the remaining debtors are good, all the amount of provision will become nil in the next reconstituted firm. The next question is date of balance sheet of the reconstituted firm will be what? As this balance sheet is made on 31st March 2021, So that is why date of balance sheet for the reconstituted firm after the admission of the new partner will be on 1st of April of 2021. That will be D, that is balance sheet as at 1st April 2021, because from 1st April 2021 till 31st March 2022 the next assessment year will continue. Now the next question, that is question number 15. Here ABC Limited forfeited 4,000 shares of rupees 10 each, fully called up, on which application money of 3 rupees had been paid. Out of these, 2,000 shares were reissued as fully paid up. Upon their reissue, the company transferred 4,000 to capital reserve. The rate at which these shares were reissued. You can see here 2,000 shares were reissued. Now we have the forfeited value of 2,000 shares will be 2 into 3, that is 6,000, and as because 2,000 shares were reissued and 3,000 money was received on these 2,000 shares on application was forfeited on these 2,000 shares. So the forfeited value of 2,000 shares were how much? 6,000, out of which 4,000 has been transferred to capital reserve. That means 2,000 amount has only been used on reissue, and as 2,000 money has been used on reissue and there are 2,000 shares, so the amount which has been used for reissue is only rupees 1, because 2,000 rupees divided by 2,000 shares will come rupees 1. So as rupees 1 has been used in reissue, that means the rate at which the shares were reissued will be rupees 9. Here the options are given wrong. The correct answer would be rupees 9 per share, because just 1 rupee was utilized in reissue. Now that's all. For the rest of the questions, do watch my next video. And if you understood, please do subscribe my channel and hit the big fat like button, because it motivates me to make some more videos for you. Thanks for watching.